Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 22nd of October 2019. And today we are looking at gold's effectiveness as a hedge against inflation. So let's investigate. Last week, we produced a video entitled, "Is Silver an Effective Hedge Against Inflation?" which showed that over the past 50 years, depending on when one made their purchase, dictated whether silver acted as an effective hedge when taking into account holdings for 5 to 10 years during that time period. And the conclusion was that sometimes it did, and on other occasions it did not. Now, we've placed a link to this video in the description box below if you haven't already watched and heard it. Now, we did have a great response to it, and we've since been asked, well, what about gold? Has that acted as an effective hedge against the US dollar and US inflation over the past 50 years? Now, before we continue, we think it's important to state why we quote 50 years. There are a number of reasons, but perhaps the three most important are: 1. It's a long enough time period to make an objective assessment. 2. Most of us purchasing gold are likely to do so with the intent of selling it again within a 50-year period. For example, very rarely do people keep such investments for longer periods of time unless they wish to hand them down to their children and grandchildren. And even if you start buying early at, say, age 20, you are likely to want to liquidate your investment during retirement from age 65 to 70 while you still have reasonable health. And 3, going back 50 years enable us to capture the gold market whilst virtually outside, save a couple of years, of the gold standard period, which ended on the 15th of August 1971. As up until then, we did not have freely floating exchange and US dollar value rates, as the latter was pegged to gold. Okay, taking the price of gold as we write this podcast video, which is Tuesday morning at 0900 hours, British summer time, and no doubt it will change during the time period we've written this and published it later today, gold stands at $1,487 an ounce. So, let's take a look at what has happened to the gold price over the past almost 50 years. So, let's do similarly what we did with silver, and that is look at the gold price from 1970, which is when our easy-to-access chart starts, until today, in 5-yearly tranches. So, as you can see, 1970 gold was $34. We've gone 4 years because we want to make it a 5-year period up until today. So, in October 74, it had risen to $155, which is a 355% gain. In 79, it rose to $387, which was a 149% gain. In 84, it fell back a little by 12% to $339. In 89, it rose a little by 8%. In 94, it rose again by 7%. In 1999, it had fallen back from $94 to $320, which is down 18%. In 2004, it rose 30%. In 2009, it rose a significant 152%. In 2014, it rose again by 18%, and to today, it has risen another 20% over the last 5 years. So as you can see on the chart here, over these 10 5-yearly tranches, we have seen gold, with just 2 exceptions, continue to rise. So, over the past 50 years, and taking into account 5-year periods, we can see gold has risen in US dollar terms on 8 out of the 10 occasions. Now, if we're still looking at this chart, say, what about every 10 years? Well, in 1970 it was $34. 10 years later, or in this case 9, it was $3.87, so it was up. 10 years later, no, it's down just slightly by approximately $21. 10 years later, it's down again by $46. 10 years later, it's up. 10 years later, it's up. So in 10-yearly tranches, it's been up 3 times and down twice. But if we actually start the 10 years in 74, it's 155, and then go 10 years from then, it's up 339, it's up 390, it's up 415, and it's up 1238. Interesting. If, however, we go from 79 and 10 yearly, it's down that year, down that year, then up and up. And if we choose 84, 339, it goes up 10 years to 390, up 415, and up 1238. So maybe you should purchase your gold with the end date ending in 4. Okay, so we've seen that taking a 5 and 10 year period, generally speaking, gold prices have risen. But that is all very well and good. But what about allowing for inflation? Rising in dollar terms means nothing until we take inflation into account. So let's go to the inflation calculator and feed these figures in. So, bearing in mind that today gold stands at $1,487, let's take a look at how, since 1970, gold has performed as an inflation hedge, assuming that the various dates that we look at, we've held on to gold until today. So starting with the first entry, 1970, gold, as already mentioned, was $34. In today's terms, it needs to be $225. Well, it's $14.87. So we have seen a remarkable appreciation. Let's go to 1974, where gold was $155. Do the calculation. Yep, it's below 1400. Let's look at 1979, where gold was $387. Do the calculation. 1368. It's higher than that today. Let's look at 1984, where gold was $339, allowing for inflation. Yep, covered again. 1989, where gold was $366. Of course, we know that's covered. 757. 1994, where gold was $390. 675. More than a hedge. Let's look at 1999, where gold was $320. Yep, still more than well covered. Now, let's start moving into slightly higher territory. In 2004, gold was $415. Still a hedge, because of course inflation started to fall significantly. Now, 2009, 1,047. Now, how does that figure pan out? 1253. Gold is 1487. So again, effective hedge. 2014, 1238. 1342. I think the figures speak for themselves. Now, isn't that interesting? Regardless of when you made your purchase of gold, providing you held it until today, there has not been a time period in the last 50 years when gold hasn't acted as an effective hedge. Or so it appears. This is not strictly true. Now, if we were a gold pumping channel, we would leave the presentation there and say, there you go, the figures do not lie. However, we tell you the truth about silver and about gold. There has been a time period in the past 50 years where if you purchase gold, not only would it not prove to be an effective inflation hedge, but you would also have lost money. Of course, we're talking about gold's peak in 2011 and the months prior to it, up and until after it, around April 2013. So if you purchased in that time period, at best you'd be breaking even today, not in inflation terms, in just dollar terms, and at worst be down $400+ on your investment. So if you purchased at the high of the 6th of September 2011 at $1,896, allowing for inflation to today, to break even, gold needs to be or stand at $2,164. And of course, it's some $700 shy of that. Now that said, apart from that small time period, gold has proven to be a most effective hedge against inflation. So you can understand why we have little patience for the pumpers who not only in 2011, but 2012, 2013, were telling people to keep buying gold as it's going to rise beyond $1,900 any day soon, and since that time have increased their quack forecasts by telling us it's going to $5,000 and $10,000 any day soon. And as we've often said, one day it will. But in the intervening period, which could be a 10-year or 20-year gap, there will be many casualties who will have been compelled to liquidate their holdings before those sorts of figures have been reached. Now, to be fair, the gold situation has proven to be far more favorable than silver as an inflation hedge, and anyone who tells you differently is deceiving you. But that said, and after all, our channel is essentially about silver. What silver does have in its favor during a time of recession and zero interest rates is that once investors catch on to gold being the go-to asset class and gold's price rises significantly, silver will then be dragged up with it. And then, if history is anything to go by, because of the relatively small size of the silver market in percentage terms, it will surpass gold. Not in real terms, in percentage terms. And it will be at that time we too will cash out or use our silver for alternative asset purchases. When will that time be? Well, no one truly knows. But we are confident it's not yet. And so we still have time to gradually increase our holdings. Now, it's also important to add that this presentation is based on the US dollar. In a number of other currencies, this situation looks different in terms of gold because even allowing for the peaks in 2011, a number of currencies have devalued so much since then, sterling being a good example, then gold today is either close to or has been higher in price than the 2011 peaks, though in sterling terms not allowing for inflation. So for example, in 2011, gold peaked at £1,177. Today it stands at £1,151, £26 below, but recently it did touch £1,278. So £101 higher. Now, not quite an inflation hedge, because it would have to be higher than that to have allowed for inflation since 2011, but also not the significant loss experienced by those who purchased it in dollars at that time. So, the conclusion of this presentation is that Silver acts as an inflation hedge depending when it has been purchased, but it's almost 50-50. Gold has acted as an inflation hedge almost 100%, save for a very small time period when gold actually peaked. Moving forward, we foresee both precious metals as an attractive investment hedging opportunity, but we do not see it rising to the levels that a lot of the pumpers are predicting, certainly not over the next 2 years, save our most reputable black swan swimming past. Thank you for listening. Please do comment, and if you can, subscribe if you haven't already done so, press the bell sign, and try and share our videos with others. It'd be most appreciated. Finally, for Inner Sanctum members, we're putting on our website this week a host of free ebooks, courses and videos, ranging from The Power of Positive Thinking version 2, to modern vlogging, how to make money on Amazon, how to set up your own Facebook group, Unshakable Confidence ebook, how to overcome anxiety, and many, many more. All of them free if you're a bronze or silver member. So please watch out for these by visiting our website at illuminatisilver.com. And also, not forgetting, our signature tune competition. That ends within the next 48 hours, so please, if you haven't placed an entry, do so, as there will be a financial reward for one person who chooses the ultimate theme. We've placed a link to that video and competition details in the description box below. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.